Hello everyone, I'm John with JP Strategic Investments, and today I'm going to walk you through what exactly we expect from Tesla's earnings and how we're going to be trading it. So let's jump right in. So first of all, we do expect Tesla to beat earnings. If you take a look at the analyst expectations, we can see that the consensus estimate for revenue is about $8.2 billion, and EPS is around the 56-cent mark. So the first thing we like to look at is what they did last quarter. So if we take a look at what they did last quarter, they did about $6 billion in revenue and 44 cents in EPS. So analysts are basically expecting a 37% increase in revenue and about a 27% increase in EPS. Now remember that last quarter they only delivered about 90,000 cars, and this quarter they delivered almost 140,000 cars. So that's about a 50% increase as far as vehicles delivered goes. And so not only did their vehicle deliveries do well, but we do expect their energy storage business to show some nice growth as well. And if you look at the revenue estimates, we do think it's a little bit low. I mean, if you think about the 50% increase in vehicles sold, probably have a nice increase from their energy storage business as well. We're looking more around the 8.5 billion mark for revenue. And as far as their profitability goes, we also think the profit margin or the EPS estimate is pretty low as well. If you look at the expectations, we see a 37% increase in revenue, but only a 27% increase in profits. Basically, analysts are forecasting a lower gross profit margin. So meaning revenue will be higher, but profits won't be higher as a percentage. And so we don't see that being the case. You got to keep in mind that last quarter their Fremont factory was closed for an extended period of time, which caused Tesla to incur some extra costs, especially because there are fixed costs within the lease and electricity and different things like that that are going to have to keep being paid even though the factory is either not running or running at a very low capacity. So there was some extra costs there, and we do realize that they did sell less S and X vehicles as a percentage of total vehicles sold in this quarter than they did in the previous quarter. So that could have a small effect on profitability or profit margins when it comes to gross auto margins, but really that's only about a 2% difference or so. And so for these reasons, we find it hard to believe that Tesla's profit won't increase at the same rate or even at a higher rate than their revenue will. So that's what we're looking at, and we think that an EPS of probably around 60 cents or maybe even a little higher than 60 cents is probably more realistic in our opinion. So that's kind of what we're looking at as far as an earnings standpoint, just the main numbers, revenue of around 8.6 billion or so, and a EPS of maybe just over 60 cents a share. So we do know that there are a variety of other numbers and accounting measures that go into exactly predicting these earnings numbers, but we're not going to go into all of that and bore you with all of those numbers. That's kind of just what we're expecting from a general standpoint, that 8.6 billion revenue number and maybe just above that 60 cents per share in earnings. That being said, there are a couple things that could affect these numbers this quarter that we do need to keep in mind. One of them is the stock compensation agreement that Elon Musk has for CEO rewards. And so if you guys don't know already, Elon has a deal with the Tesla board that if the company does well, if it reaches certain market capitalization checkpoints, then Elon is actually issued more shares for kind of a reward or compensation for getting the company to that level. And so those are issued as new shares, and it shows up on the income statement as a stock-based expense. So it would technically affect GAAP net income. Now, this shouldn't really affect the stock too much because it's basically just a one-time expense. It's nothing that has to do with Tesla's business or how well they're doing. But there's always a chance that Wall Street, in their infinite wisdom, looks at this as negative and the stock could suffer from this after earnings. So it's just one thing that we have to keep in mind. And so one last thing about these earnings before we get into how we're actually trading them is if they do report strong quarterly profits, there is another chance that Tesla could be included in the S&P 500. And so we could get kind of similar speculation as we did last quarter where the stock had a pretty decent climb in expectation of them being included in the S&P 500. And of course, all of you probably know kind of what goes along with that. There's been tons of articles and videos done on that, so I'm not going to go over exactly what S&P inclusion would entail, but obviously it's a good thing for the stock. And so if we do see some strong quarterly profits, especially if they are profitable without regulatory credits, that could definitely be a good sign that there's a possible S&P inclusion coming up with that. So now that we've gone over that, let's talk about how we think the stock will perform after earnings and what trades we're making to take advantage of that. So basically, if we had to break this down into kind of percentages, we think there's about less than a 10% chance that the stock will actually go down more than 5% after earnings. We think there's about a 30% chance that it'll stay within a plus or minus 5% range, and about a 60% chance that we could see the stock moving up more than 5%. And if really we had to break it down into one specific prediction, probably going to be looking at somewhere around a 10 to 15% move, maybe a little higher on the upside for the stock. And we do think that if they do report strong earnings, there's a good chance that after this 10 or 15% move, we could see over the next month or so the stock move up into the mid 500s. And there's a couple reasons that we think this could be true. One is the S&P inclusion, as we mentioned. So if there's a lot of speculation that Tesla will join the S&P 500, we could see a nice increase there. The other is the FSD rewrite, which they just kind of released to their small group of early access drivers. And we think this is going to be a game changer, honestly, and it should renew interest in Tesla's self-driving program from an investor standpoint and really get things going there. And if this does pan out, and especially if it's opened up to more and more people over the next month or two, we could definitely see some nice increases in the stock there. Now, obviously, there's a lot of other things that are happening over the next month. You know, we could see stimulus packages. We obviously have the election, and, you know, coronavirus news can happen out of nowhere at any point, which obviously is going to affect the entire market, including Tesla. So these are rough estimates, but basically from what we can predict, this is what we are expecting. So with all of that said, here's kind of a chart that breaks it down nicely for you. So this is kind of how we think Tesla could perform based on different scenarios with their earnings report. So the red line is kind of a bearish scenario. If they report slightly under guidance or kind of maybe even just in line with it, the stock could go down a little bit. But we think it'll kind of hang around the 400 support level there and even move up a little slightly afterwards. The green line is the bullish scenario, or maybe a better or best case scenario for the stock. So if we get killer earnings, maybe even come out with an EPS in the 70-cent range or 80-cent range, which is always possible. Tesla always surprises us with these earnings, and they could come out of nowhere with a number like that. We could definitely see the stock follow some path close to that green line, and then the blue line is kind of where we think the stock will most likely go. So again, obviously these estimates are rough, but that's kind of what we're looking at. So now, what you've all been waiting for, how are we going to trade the stock? So we do own some shares. We currently have Tesla at about 18% of our portfolio. If you guys are wondering what other stocks we invest in, you can definitely check out our website or the rest of our videos on our YouTube channel. But Tesla makes up about 18% of our portfolio right now. We have also entered some options positions as well. We purchased a few diagonal call spreads as well as some vertical call spreads. Now, if you don't know about options, don't understand options quite yet, this might get a little confusing. You can hang around, you can watch it. It's probably good for you. But for the rest of you, if you do understand options, basically to kind of walk you through what we've bought here. So really quick, the vertical call spreads that we bought, kind of a long shot, but it's a nice payout if they do get there. Basically, we bought the 500, 520 spreads, and we only paid about a 70-cent premium on there, or $70 for the contract. So, picked up a couple of those. Again, it's a long shot that they get there, but if they do get there, the payout's really nice. Those could obviously reach a possible full potential of $2,000. So $70 into $2,000, we just thought it was worth the risk there. As far as the diagonal call spreads that we bought, We bought a few 450, 480 spreads. Now with these ones, the 450 leg expires on October 30th, so not this coming Friday, but the next coming Friday. And the 480 leg expires on this Friday. The others are 500, 550 spreads, with the 500 leg expiring on 11/20 or November 20th, and the 550 leg expiring on October 30th. So we love to use diagonal spreads. It's a really cool strategy in our opinion. Just to kind of illustrate why we're using diagonal spreads in this scenario and how exactly they work, I'll just use the 450, 480 spread as an example. So basically this spread cost us about $1,100. So the 450 call, we bought that for $1,400, and the 480 call we sold for $300, so a net cost of $1,100. So basically what could happen here is if Tesla were to just shoot up past that 480 mark, you know, it gets to like 500 the day after earnings or whatnot, basically we'd be able to sell these for about $3,000. So paid $1,100, selling for about $3,000, almost triple our money at that point. So really nice payoff there. But the nice thing about these two is even if the stock were to just go up to say 450, because that 450 call doesn't expire until next Friday, it will retain a lot of its value. And the other call, the 480 call that expires this Friday, would most likely be close to worthless, and would most likely, if we continue throughout the week, expire worthless, meaning we'd get to collect that entire $300 premium. Now, the really nice thing about these strategies with diagonal spreads here is if we did get to the end of the week and the stock was not above 480, then that option does expire worthless. But we still have the 450 call that it doesn't expire until next Friday. So the nice thing is we can either hold on to that call if we want, we can sell it if we want, or we can hold on to it and sell another call against it. We could sell another 480 call or even a 490 call on that same Friday that it expires, and now we can collect even more premium. So diagonal calls are really nice because they can allow you to collect even more premium. It's almost like having a short-term covered call, if you will. If this is confusing, I apologize. This is kind of mainly for those investors that are familiar with options. If you aren't familiar with options, they are really cool. They're very complicated, but they have a lot of advantages. So I would recommend just checking out some videos. There's tons of videos on YouTube about options. We have a few videos that are mainly more advanced, but there's tons of beginner videos out there, and I would definitely recommend checking that out if you have not been introduced to options yet. So that's kind of how we think earnings will go and the stock will perform and how we're trading it. I hope you found this video helpful. If you did, please consider liking and subscribing. It definitely helps the channel out. And if you have any questions, definitely put them in the comments below. Other than that, good luck on your earnings trades and have a great day.